Hello everyone, today is Wednesday, January 29. Let's take a closer look at the charts for the euro and the British pound and assess potential market movements. Starting with the euro, the market remained relatively calm yesterday. The single currency struggled to make any significant recovery against the dollar. Later in the day, traders received quite disappointing US consumer confidence data. The Conference Board reported a decline in its consumer confidence index, falling to 104.1 this month from 109.5 in December. The dip reflects growing caution regarding President Trump's policies, including his recent executive orders and the looming threat of tariffs, which are expected to impact both businesses and consumers. In this context, the euro managed to edge slightly higher ahead of the Fed meeting. The situation for the British pound was similar. Despite strong efforts from sellers to push the price lower, sterling managed to hold its ground, signaling that there is still potential for further upside. Now let's turn to today's macroeconomic calendar, which includes key data on German consumer confidence. The forward-looking indicator is expected to rise to minus 20.5 in February, signaling that Germany's consumer sentiment remains deeply pessimistic. The calendar also features LinkedIn data from the Eurozone. However, the main focus will be on the Federal Reserve meeting. The US Central Bank is widely expected to keep the Fed funds rate steady at the 4.25% to 4.5% range. Attention will be on the Fed's accompanying a statement, as well as Fed Jerome Powell remains at the subsequent press conference. Traders will be watching closely for any hints about future policy decision. If Powell suggests that the Fed needs to keep interest rate high, the recent sharp declines in major stock indices could extend further. A sustained market correction might prompt intervention from President Donald Trump of the broader US government to limit losses. As such, it would not be surprising if Powell hints at potential policy easing in the near future. In that case, the Forex market would likely see a weaker dollar and further gains in risky assets, including the euro and the British pound. Given that Trump's position on tariffs is not yet aggressive and with the Fed's policy stance unchanged, today's meeting may be more of the placeholder with little immediate impact on market sentiment. From a technical perspective, the 1-hour EUR USD chart indicates that a false breakout at 1.0415 would trigger a strong buy signal, potentially pushing the euro, to 1.0453. If the price breaks through and consolidates about this level, the path to 0.490 would open. In the event of a more dovish stance from the Fed, the euro could extend gains to 1.0531. At this point, I would recommend going short on a rebound, targeting an intraday correction of 30-35 pips. Short positions at 1.0453 and 0.490 could be considered on the false breakout, with the initial target at 0.415. A breakout below this level would clear the way to 1.0375 and 0.343. Where it would be wise to go long on a rebound, expecting a 25-30p move. Long positions at 1.0375 and 0.415 should only be considered on the false breakout. Speaking of the British pound, major sellers are expected to take over around 1.2471. With no significant UK data on the macroeconomic calendar today, the pound's rally is likely to be limited. A false breakout at 24.71 would generate a sell signal, dragging sterling down to 24.15. If the price breaks through and fixes below this level amid the Fed's more cautious stance, the pound-dollar pair could extend weakness to 23.78 and possibly 23.41. At this level, traders are advised to go long on a rebound, expecting a 35-40 pip move. Long positions at 1.2378 and 24.15 should only be considered on the false breakout. If selling pressure is subdued at 24.71, a breakout about these levels supported by a dovish stance from the Fed would open the way to 25.19 and potentially 1.2571. At this mark, I would recommend going short on the rebound, counting on an intraday correction of 25-40 pips. Going short at 25.19 and 24.71 would be a level relevant in the event of a false breakout. Good luck to all today.